Good morning, everybody, and happy Monday and happy first work day of May to everybody. My name is Tony Butler. I am one of the life sales directors here at Insurance Agency Marketing Services. And with the month of May being Disability Awareness Month, we wanted to talk to advisors in regards to disability insurance or protection. Income protection, I should say. So I have Brock Falconer with Illinois Mutual on the line with me, and he's going to go over uh, some things in terms of how to approach your clients regarding disability insurance or income protection, if you will. But before we get started, wanted to talk to you guys, those of you that are familiar with IMS, you know that our advisors are priority one with us, and there are some additional perks that we have available for agents and for you agents that are new with IMS, would like to go over some of the things that we provide for you, the advisor. So with that, we'll get started. We do have our new producers builders. And with our new producers builders for you new agents, based on the production that you submit, there are additional perks that you can get, whether it's mailing pieces. We do have Boss Radio available. Marketing dollars are available as far as reimbursement for some business that you submit. So if you have questions, you are a new producer and you would like to get information, more information, I should say, regarding our new producers builders, please feel free to reach out to any one of the sales directors and be more than happy to provide you with additional information on that. We also have our IMS Business Builder, and that is our way of saying thank you to our advisors. Meaning, if you were to refer an agent to IMS and that agent subsequently gets appointed with one of the carriers that we work with, we do provide you with the $50 one-time bonus or referral bonus. Any subsequent business that they submit, we do provide you with additional bonus on that business that they submit. It doesn't take away from what they're being paid in commissions, but you do get additional perks in regards to that. And again, that's our way of saying thank you for uh, getting that business over to us. We also offer back office support. We definitely want you to work smarter, not harder. So we're here all the way from submissions to commissions. So what that entails is paperless contracting. We do have business building resource tools available to you. We can do life and annuity quotes for you. That is also available on our website, as well as various forms. In saying that, our website is a 24/7 website, as you see here, www.imsinc.com. What's available on our website is a plethora of information, whether it's sales tools. If you're a life agent, you're able to do term quotes as well as universal life quotes on our website. As I mentioned before, forms are available on the website. For you annuity agents, we do have current annuity news available, as well as long-term care product information. If you need help or assistance in navigating through the website, be more than happy to walk you through that. I'll have my contact information available to you at the end of the webinar. Feel free to reach out to me with any questions that you have. In saying that, as far as our website is concerned, with the current pandemic, we get a lot of advisors that say that they're having trouble getting in front of clients. You have clients that aren't able to get out. So with that, e-contracting, or excuse me, e-applications has been extremely important for agents to continue their business or build their business. So if you're a life insurance agent, we do have iGo eApp solutions that's available on our website. We also have a second platform, which is Firelight. Now, Firelight, the majority of the carriers that we have on Firelight is our annuity carriers. As you can see here to the left, these are the carriers that is available on the Firelight platform. On the right are the carriers that will be coming soon. So if you haven't gotten registered on the IMS website, definitely need to get you registered on that. We can also walk you through getting registered on the Firelight platform as well. We also have creative marketing solutions. So If you're an agent looking to grow your business, just starting out on your business, we can provide you whether it's turnkey, agency, or digital solutions. What we like to do for advisors is what we call a marketing analysis. I think this separates us from other IMOs and FMOs. We can have a conversation in regards to your business, how you're currently conducting business, what you're looking to do in the future, and kind of come up with a very methodical process to help you grow your business. So whether we need to talk about newsletters, flyers, or handouts, you're looking for a logo design, business cards, or you're looking to get into the social media market, whether it be updating your personal website, email marketing, things like that, we can definitely help you with that. I would suggest that you reach out to your sales director to have marketing analysis done. If you don't have a sales director, I'd be more than happy to help you with that. And in fact, I do have a polling question in regards to a marketing analysis. So if you would be interested in having that to help grow your business, if you could just respond to this polling question, definitely we'll reach out to you. So I'll leave this up for a little bit while everyone is responding.
Tony, I thought you promised no homework, man.
Pop quiz. How's that? Pop quiz.
Yeah, that's right. It doesn't count towards your final grade.
Yeah. All right, so we'll go ahead and close this out. We also have Retirement Analyzer. I've had more conversations with advisors regarding how can they qualify their clients, find out what their clients' needs are. The Retirement Analyzer is definitely a tool that you can utilize to answer your clients' questions, whether it be when can I retire safely without running out of money, how could my situation change during turbulent economic times, such as now. The Retirement Analyzer we do offer free for qualifying agents. Do have information available for you on the Retirement Analyzer. So if you have questions, would love to take a look at this, kind of walk you through the process. Feel free to give us a call. Be more than happy to do that. Lastly, we have an IMS Wealth Management team. For your higher net worth clients, the wealth management team is there for you guys to have conversations with those clients. We've definitely seen them be able to have the advisors increase their revenue, improve client retention, strengthen the relationships with those clients as well. So if the wealth management arm of IMS does interest you, I suggest you reach out to Charles Hiring. He'd be more than happy. He and his team do a great job of walking you through what they can provide in terms of that. So with that, I am going to turn this over to Brock. So Brock, I'm going to make you the presenter.
All right, sir.
There you go.
All right, let me double check that you're seeing what I see. Reminds me of a song, but I won't break into song. So let me just make a plug real quick, guys, before I introduce myself, who I work for, and why we're here. And just so you know, it's not about reverse mortgage opportunities. When Tony talks about referrals, I would encourage you guys to think kind of twofold here, guys, when talking about, but to other professionals in our insurance industry, right? Whatever market you're in, or maybe an adjacent market, but obviously in insurance. So yeah, there's an opportunity to bring someone in and kind of utilize Tony and his services for the same stuff that you do, right? One-touch shopping for, all the different opportunities and value adds that IAMS can bring. But also, it could be a great kind of warm opportunity to bring in the idea of maybe doing some business sharing as well, right? Maybe there's a P&C folks that or folks that aren't really into risk protection. So you could bring up the idea, hey, I'm into these markets. I partner with this company as kind of a one-stop shop brokerage resource or IMO resource to be able to connect me to these opportunities, right? And that's there for you as well. I'd encourage you to check them out. Or if you want, maybe we can do some sharing, right? Maybe I can do the risk protection for your folks and you continue on your P&C way and things like that, right? So it could be kind of a joint opportunity for you to kind of talk about both ends of the fence, because either way, that's great for you guys, right? To potentially build some referral pools for you, or maybe get a little referral bonus from getting an agent connected with Tony and his team. So just kind of a side thought there. Again, just quickly introduce myself. My name is Brock Falconer. With a name like that, I always said it would have been really tough to be born with a high-pitched voice, right? Kind of a demonstrative name. I've been in the disability market space for about, I don't know, 14, 15 years now, maybe. I'm losing count. I'm out of fingers. Used to be on the brokerage side, so I definitely wore kind of Tony and his team's hat. Now I'm with Illinois Mutual, which means I had to learn the word no, right? Because on the brokerage side, you could kind of fulfill any opportunity. Now I'm kind of more niche specific, and I'll get into a little bit of that. But just to be honest with you, I'm going to more focus on kind of our Graceland, this exciting time of Disability Insurance Awareness Month, right? So I really want to more talk about encouraging you guys and giving you quick, easy, turnkey ways to talk about disability insurance, and really honestly to talk about income protection and the idea of paycheck insurance, and not even say disability insurance, right? Because I think language is really important in everything, right? It matters what we say and how we say it, not just what we're trying to get across. And especially in insurance, right? Especially in what we would consider an ancillary, or one of the most unknown insurances. And one thing that we do know, that disability insurance is the number one most undersold insurance. And I'll get into that as well. Quick history in Illinois Mutual, fifth generation mutual company. I'll never have to own or run the company because, it's owned by policy owners, obviously, and I have the wrong last name, right? Fifth generation president right now, Katie McCord, and 111 years in the disability market space. So we got this pretty well mapped out at this point. And our focus is really more outside the box if you think about the disability insurance market space, right? We're kind of a unique DM beast, if you will, because we focus on more middle America. Some people would call us maybe more of a blue collar carrier. I don't really think that's a great term, just because I don't really like to talk about what someone wears and what their collars look like, number one. But then number two, specifically, because one of our specialty marketplaces is one that a lot of other carriers struggle with, and that's like paraprofessionals, right? Like a vet tech or a nurse or a dental hygienist. And I'm pretty sure if you approach them talking about them having a blue collar occupation, you probably wouldn't get very far, right? So I really think of this as more kind of middle America focused. If you think about good old Leonardo DiCaprio on the front of the Titanic, right? King of the world, he sees this huge iceberg, and, it brings down the big ship. But keep in mind that 80 to 90% of that iceberg is actually underwater. So as massive as that is, sticking out of the water, it's actually way bigger underneath. And that's really where our focus is. Not that we're, huge into diving. In fact, that would be an exclusion if you're into diving, if you put an application in. But what I'm basically saying is, we focus on like the, I don't know, 75 to 85% of society that's not making $200,000 or more. So that, again, for us, that's more middle America versus, some blue collar occupation. The majority of the industry is, you're probably aware, and if you weren't, you won't be able to say it tomorrow, because I'm telling you, be aware. The industry chases the doctors, the attorneys, the executives, that kind of upper echelon, right? The top, 10, 20% or so. To no fault of their own, it's just folks that we know, number one, are probably more insurance savvy in the first place, right? They're more apt to have permanent life insurance versus just term, and they'll have some annuities and potentially even purchase long-term care before 70 years old and all that fun stuff, right? So disability insurance has kind of fallen into that same fold, if you will, for the most part. But again, Illinois Mutual just kind of tried and true that middle America. I mean, we're a Peoria, Illinois based carrier, right? I myself am in Parker, Colorado, right outside of Denver, originally from Seattle. So I'm not in that neck of the woods, but that's really where the company's based, as well as where the majority of our company population is. A very small population overall anyways, because we're about 215 employees or so, right? So small carrier doing big things. We do not have a 2,000 person call team in Dubai by any means, right? We are all about just kind of, slim and trim. And again, we just understand that market, right? We understand the Midwest. So let's go ahead and get started and talk about how language matters, as well as hopefully get some people fired up for Disability Insurance Awareness Month. Because as you can imagine, for us in the DI market space, it's like you just got a new suit and you want to wear it out and show it off, right? So when talking about language matters, one of the first things that, I will be very open and honest, and Tony's probably rolling his eyes right now because I probably use this slide in this conversation every single meeting I've had over the past 6 months. The best way to not sell DI is to ask someone if they want it. Why is this how we sell disability insurance? It's like we're asking out, little Mike, Timmy, or Sally in fourth grade, and we're passing a note down the aisle. Will you go out with me? Yes, no, or maybe. Do you want disability insurance? Yes, no, or maybe. Well, we didn't woo Johnny, Mikey, or Sally, and we didn't woo our client by asking them that, right? I'm not saying we should bring our clients flowers. That could get us in hot water every now and then, and possibly every time. What I'm saying is let's approach it maybe a little bit differently, maybe take a little bit of strategy, as well as, really we need to bring people into what we're talking about here. And this isn't on you guys, this is on us as an industry. And I won't even take the fall because I've only been doing it since '06. And like I said, Illinois Mutual's been at it for 111 years. I wasn't there in the beginning, and we're not the oldest carrier either, right? So I think one of the biggest issues, unfortunately, is that disability insurance is almost like named improperly, right? Because you're insuring your ability to do your job. And when we talk about a disability, what are we thinking about? We or our clients, right? We're thinking about the Christopher Reeve situation, right? Fell off a horse, never able to work again, or at least not able to walk, and obviously pretty tough to get an acting job if you can't really do much, outside of maybe a specific role. And it's not really what we're talking about here. We're talking about your ability to have a paycheck. When we ask someone what the most important asset is, I hope that they think it's their ability to earn an income, but oftentimes they won't think about that. Why is that? Because they're assuming that opportunity is always going to be there. Outside of retirement, being laid off or fired, or maybe your company being bought out, you're not thinking about the fact that there's no guarantee you're going to be able to get up and do your job. One of the other big issues is too. Sorry guys, I'm turning down my heater because it's like 400 degrees in here. Um, One of the other things we need to be cognizant of is the fact that most people think that their group insurances are really going to be their kind of go-to and really the only thing for them. Again, not on you. This is on us in the industry. We do a very bad job at just letting people know that this stuff's out there. How many life insurance commercials have you seen on TV versus disability insurance commercials? And by the way, I'm not talking about any quacking duck commercials because that's not really disability insurance. That's more accident only coverage, which is another issue, guys, because that's what most people connotate to why this stuff is needed. The bad car accident, the slipping on the ice and stuff like that. And, that happens. And it's great that maybe you can get $100 for a broken arm and, $75 for a separated shoulder or whatever those accident only policies will pay out. I don't really study that stuff too closely, even though we do have kind of a part and participle of that in our contract. But more importantly, we need to focus on the fact that 90% of claims, guys, again, I'll reiterate, 90% of claims in the disability insurance industry are illness-based. So right from the start, we need to just concede, put all our cards on the table and say, you know what, we need to change this narrative because we know where people's heads are at. Before I started in '06, '07, I didn't really think about the fact that there's an insurance outside of what your health insurance plan is, right? Or maybe some kind of rider or something maybe attached to a life insurance, living benefits, critical illness rider, whatever that may be, right? I didn't really know that there was anything specifically that would replace your paycheck if you weren't able to work because you have an illness that forces you to be unable to work, right? I didn't know about that. I knew about some group insurances and things like that. One thing I learned very quickly, and this is actually before I got in the industry, and I was reminded afterwards, that there is some stuff oftentimes through people's employers, assuming they're W-2, of course. Now, this stuff, by the way, is falling to the wayside, guys, as we see a lot more privatization of the ancillary benefits because there's two ways for a company to be profitable, is there not? Either sell more widgets or cut back on costs. Well, what's the more apropos thing? Probably, in this more and more competitive economy and market, whatever field the company's in, probably concede that it's easier to cut back on costs than it is to sell more widgets. If they can win on both sides, well, then the margins are going to be really good, right? But these ancillary benefits are the ones that are going to fall off. But one thing I saw, again, before I started, as well as have been reminded afterwards, is how little a lot of those group benefits pay out. It's not like they're, horrible plans or trying to rake people over the coals. The simple fact is that most of them are paid for by the employer. Therefore, it's a taxable benefit. And I'll get into a few pieces a little bit later on why it also gets limited as well, depending on what your occupation is and how you're paid. But, just note that, it was very eye-opening and instantly made me a passionate believer in this kind of insurance when I learned that there's really nothing else for someone other than an individual disability insurance plan to definitely make sure that their most important asset is insured. So again, language matters, guys. One of the first things we need to do is separate where we know people's heads are going to go when we say, hey, do you want disability insurance, yes or no? And we need to lay a better foundation for what this stuff does for them. One of the best things we need to do is find your own box and your own color bow and your own fancy way to tie it. Meaning, instead of disability insurance, income protection, paycheck protection, lifestyle protection, retirement protection. Notice I'm using protection instead of insurance. Insurance feels like something you buy, protection sounds like something you need. If you were in the woods and a bear was charging you, would you be hoping for insurance or protection? Why is this any different, right? Also, as a reminder, always bring someone a little bit slower than you in that situation. But again, that's a separate webinar altogether. Retirement protection, a mug plan. Mr. and Mrs. Smith, have you reviewed or would you like to talk about putting a mug plan in place? What's that? They have no idea, right? That's good. We want discourse. We're in insurance. We should be able to talk. We should want to have discourse. A mug plan is your ability to pay your mortgage, utilities, and groceries if you're unable to work. Simple as that. Foundation of the foundation, right? Nothing more important than your mortgage, utility, groceries. Obviously, there'd be bills you'd want to pay outside of that, but my goodness, think if you could at least make sure the roof stays over your head, food on the table, the lights stay on, then maybe you can figure everything else out. We could probably get a benefit larger than those costs, but bare minimum, that's what we would want, right? And then obviously insuring your most important asset. Have that conversation with your clients. What's the most important asset in your life? If they say their house, back them up. Say, well, how do you pay for your house, right? Hopefully they say their income, right? And do you think it makes sense to insure that most important asset? Another quick exercise, Mr. and Mrs. Klein. Let me give you 4 things. Tell me which of these 4 is the most important to you. Your house, your car, your cell phone, and your income. I would hope 10 out of 10 times they say their income. In fact, I would say anyone that doesn't is probably just kind of being stubborn because they already feel that they know where this is going to go. You know what I mean? We've all met and know plenty of those people. Okay, so it's your income. So just a second question based off these kind of 4 things. Which of these 4 have you insured? How telling is that? Right, guys? We've insured our house because we have a mortgage, we have a choice. We've insured our car not for what's bare minimum legally required, which is this liability. We have full coverage. Why? Because it's important. Okay, let's remember that word, important. Okay, great. And you've insured your cell phone. Why? Well, I mean, I don't want to have to fork up $1,500 to replace this thing, and I need this. It's important. Remember that word? Important. Interesting. But you haven't insured your income, and can we concede that, number one, that we already decided this is the most important out of the 4, right? Right. Can we also concede that it's your income that actually not only allows the house, car, and cell phone to be in your life, but also pays for these insurances? So could we paint maybe this mental picture that we have a big hill that we need to go up, right? And we have a horse and a cart. The issue is the cart is in front of the horse and the horse is using its head or its shoulder to push the cart uphill, right? And I don't think that's the best use of the horse's power and energy and strength, right? So we need to maybe put things in the correct order, right? And again, this important idea, right, came up, the house is probably required, right? You're gonna have to have homers if you have a mortgage, or at least when you first take it out. I guess you can maybe drop it behind the scenes. I don't know if they check on that, honestly. But again, it's important to have full coverage in your car, uninsured motorists and, all this good stuff. Insuring your cell phone because you don't want to have to, cough up $1,500 on the fly. Isn't it then even almost more important to insure your income than these other things? Because again, without your income, how long are these things going to stay in your life? And what are you going to utilize to keep them in your life at the same rate, keep paying the insurance premium, so on and so forth. Again, I think I've made a few points here maybe, but does any of this require you needing to be a disability insurance expert? Right? All we're doing is setting the stage for why disability insurance is important, but what we did not do is ask them whether they wanted it, right? Because I think we could just very quickly and easily decide that that's not going to be a very successful sales technique, right? A few other things that I would encourage you to do. Another exercise that I think can be very telling because, and I'm sure you guys do this in your other products or have utilized this kind of concept or idea in some way, shape, or form. But I encourage you to use an exercise where you have a blank sheet of paper, right, with 3 bullet points with your client. First bullet point has 6, next one is 12, last one is 24. And this is one of those exercises where the first person to speak afterwards loses. Loses meaning has kind of let go of kind of their stubborn angst, right? Their cards are no longer close to their chest. So I don't care if it takes you 15 seconds of waiting there or 15 minutes. I think this is important because the client needs to set the stage of what the pains are, what the issues are, what the problems are in their own words. You could tell them a million different things they should do, but until they do it in their own words, or at least accept what you're saying, which is a lot harder to do, they're probably not going to act on it, right? We need them to feel the pain. We need them to hypothetically go through the exercise. So the idea here with these bullet points would be, Mr. and Mrs. Klein, if you could just jot down, take 3 or 4 minutes. Shorthand, let me know what 6, 12, and 24 months without a paycheck would mean to you. What would happen? And this is a beautiful question, right, guys? Because we already know what the answers are, right? It's going to be first savings probably in the 6 months, 12 months. Now we're into retirement. And at 24 months, assets are being put on the market. Maybe rich Uncle George is being contacted too. I'm not sure yet. I think this is huge, guys, because you guys have a solvent in your back pocket, and you have Tony and his expert team to be your connective tissue to whatever carriers you would need to fit the bill here. And what's really important is the fact that, again, the client, in their own words, is building the pain. They've already conceded their ability to earn income is their most important asset. Now they're going through the exercise of how painful it would be without that most important asset. And there's really no other ifs, ands, or buts about it, right? Who's going to be their friend if not for us with an individual disability insurance plan? Social Security is their friend if their disabling event has the opportunity to lead to death within the next 2 years, or if they are disabled from any job on the planet. But keep in mind, even if, and most people's are not, when I say most, I mean 90+% of disabling events are not that severe, but even if it is, there's a chance it could take up to 24 months for Social Security to pay out. That's one of the reasons why kind of the extended period on this exercise is 24 months for me. Why go further? Why bring them through the idea that they might be permanently disabled? Because isn't the next 6, 12, or 24 months much more important than 30 years from now? Because if you can't get through the next 6, 12, or 24 months, what does 30 years from now matter? Right? If I trip and fall on my face and break my nose, I'm not worried about breaking my leg 8 years from now. I'm worried about the fact my nose doesn't feel great and I'm going to have to get this figured out, right? A couple other questions that I think can be helpful. And actually, let me back up real quick, guys. Just keep in mind another reason why I use this exercise with these short periods is because, well, a couple reasons. Number one, definitely people are not sitting with the same rainy day fund they used to be. I wish it were the case. It's just not, right? Reaganomics is not happening. It's not here anymore. I don't care if you're a doctor, attorney, executive, carpenter, or house cleaner. It doesn't matter. People live a lot closer to the red line than ever before in U.S. history. It's just a fact. I didn't make the rules. I'm just living by them. And secondarily, the average length of claim in the industry is 2.7 years. That's one of the issues why clients and people don't latch on to the idea of disability insurance. It's because of the fact that they don't know anyone that fits what in their head is the definition of a disability. Apologize. Or what a disability looks like. Kind of like when your throat clams up in the middle of a meeting. But people obviously can't go 2.7 years without a paycheck. How on earth can you make that happen? Who's sitting with that kind of rainy day fund? It's just not realistic in the least. A couple questions that I think can be very helpful as well. How long could you maintain your bills? And who else would be affected? Are we pulling kids out of college or putting the cost back on them because you can't afford it anymore? Are we not funding retirement funds? Are we pulling money from retirement funds? Are we not able to help our parents, or brother, or sister, or kids? Are we pulling kids out of private school, putting them in public school? I mean, how does this unfold? Who would be the first person you call, and would needing money be part of any of your conversations? I think this is a great question, guys, for two different reasons, really, because it makes them think about who they would call and how many people kind of down the line of calls, hey, this happened to me, this is the hospital I'm in, this is the diagnosis, whatever it may be, right? But also, this can be switched as kind of a referral opportunity, right? If anyone around you suffered a disabling event, who would be calling you for help? Right now, all of a sudden, you're tapping into that human nature of protect thyself, thy family, right? Now they're going to be thinking about, oh, wait, this person, and this person might be calling me brother, sister, whoever that may be. Let me kind of protect my nest egg and what I've created and my family and all that good stuff. Get this producer, connected to them to talk about that stuff, right? That could be good too. If not you, whom would support your family? How powerful is that, guys? If you couldn't support your family, and I'm not saying we want to poke people's pride with a hot poker, right? But I'm just saying, what's wrong with that? I mean, if they have that inherent pride, you didn't tell them to have it. You didn't build it for them. You didn't tell them to puff their chest out. But we need to get them through the exercise of thinking about, hey, you might not be able to puff your chest out, right? And so, what are we ultimately trying to do with disability insurance? We're trying to put the risk on the carrier, right? That's one of the biggest things that we try to do with risk protection, right? Let's push the risk off. Why do we want to inherently keep the risk ourselves? Why don't we partner with the carrier so that we can have them support that risk? And that's what we're talking about here. Because yeah, you might not be able to work anymore. Therefore, there might be a little bit of a ding on your pride. And more than likely, it's not going to be a permanent period of time. But again, we've already gone through the exercise of how long you would be able to kind of survive, right? And what that would look like, and what you would wipe out, and how much catch up you would have to do once you're back to work. But isn't there like a new reason to puff out your chest and have pride because you had the wherewithal and the gumption and the know how to put one of these policies in place to transfer that risk correctly? We didn't just rely upon that taxable group insurance that paid only a small percentage of our income. We didn't rely upon rich Uncle George. We didn't have to rethink our retirement plan or push it out further because we had to pull from it. We didn't, wipe out 10 years worth of savings. We didn't have to take the kiddo out of private school. We didn't have to stop those college tuition checks and send our kid to community college instead of a 4-year. Again, not that there's anything wrong. I've done them both. I loved them both. But I'm just saying, you have a plan. This is one of, if not the only way, if you suffered a disabling event, to make sure that that plan, yeah, there's going to be some bumps in the road, but chances are you're going to stay on the same path. And I think that's what people's ultimate goals are, right? And again, they're assuming that this stuff isn't going to happen. That's on us. And honestly, it's more even on you than me after something like this, right? Tony and myself aren't just going to one-stop shop you. We are going to make sure that we're continuing to kind of keep this story going and keep this alive. But again, it's up to you guys to proactively talk to your clients, because we know who proactively approaches us for this stuff. There's cars in the background because they're on their cell phone. They just left the cardiologist and oncologist, right? They just got a diagnosis. They're in a hospital because they have already had the car accident, right? And we know we can't insure the car after the accident. So it's really up to us, Tony and myself, to educate, motivate, and then you guys to be proactive with this stuff. And I challenge you to do so. Business owners is a huge market for us as well, guys. One thing we need to do, again, seems like this is the theme of this presentation, change your client's mind about what's really going on. oftentimes business owners will think that their business is essentially self-sufficient, right? I have people or a person that can kind of run the business for me if I'm out for a period of time. Because I think we need to be open and honest about the fact that most people are not permanently disabled, but even a short period of time is a lot larger blip on the radar than people give it credit for. That's why I want to put them through that 6, 12, 24-month exercise. But I think we need to challenge this idea, right? Oh, your business is essentially self-sufficient. And when was your last 2 week straight vacation, and why aren't you better at golf? Right? Why don't your kids know your middle name? I mean, why are you working 80 hours a week? I mean, if you could have tested this theory and gone on a vacation, or gone and hit a few more balls, or again, obviously this is something that can and should be changed according to who you're talking to. Obviously, I'm just throwing out a couple questions for ideas, but if you can test this theory when you could come back early if need be, if you know what hits the fan, why haven't you done it? I would argue it's probably because you don't truly believe it. And maybe you haven't really thought about this, but that's why I'm here, to kind of have these tough and unfortunate kind of conversations, right? Talking about risk protection. And again, this key term, transferring the risk, because that's really what we want to do. Because why would we want to test this when we're in a situation where we can't do anything about it, right? You're not willing to test it when things are good. Chances are you really don't truly inherently believe that that's a plan that's going to work out for you. And I think that could be very important for business owners to just go through, again, that mental exercise. Just accept the fact that while they could be right, why take that chance? Let's transfer that risk. That person can probably run the business, but why don't we take care of the financial side? Why don't we take care of your personal liabilities, as well as do a separate business expense plan that you can use as kind of a reimbursement tool to pay your fixed overhead expenses and get that stuff off the table. Kind of like the mug plan idea for individual DI guys, right? Make sure at least the mortgage, utility, grocery bills are taken care of. Now we can kind of figure out a plan for the rest, but man, that big stuff's off the table. Same for the business owners, but on both sides of the fence. Cover that kind of mug stuff for their personal financial liabilities. And then again, the fixed overhead expenses, rent, utilities, admin, employee salaries, get all that stuff off the table. Then they can kind of figure out stuff from there. And that way it's a rip and burn and churn in business that maybe that person or persons can kind of run and everything's good, but at least they're not having to, keep building the revenue. It's more just kind of staying tried and true and staying where you are and just getting through the situation, right? Keep in mind as well, guys, I think it's really important to have some of this stuff yourself. And I know this sounds like one of those, come sell knives with us opportunities, buy the first set yourself and then go sell it. That's not what this is. What I'm saying is you need to have the conviction when talking to clients to have this stuff, whether Illinois Mutual or anyone else. Maybe you already have some, fantastic. But I mean, as soon as you get asked by a client, what do you have? And you say you don't have it. I mean, you might as well move on, right? Or unless you want to lie, but that's a weird way to set up a relationship with the client. And keep in mind, we do a 5% discount at Illinois Mutual for advisors to and agents and insurance professionals to buy DI in themselves. We'll even offer up to $1,000 a month if you're newer in the industry and not really showing any income yet. We know it's typically residual and commission income, so obviously it can take some time for that to trickle down the wire. And I just think it's important, as well as I would argue, guys, that there's a subconscious comfortability when you've been through the process at least once. You know what to expect. And I just think you speak from much more of a place of knowledge and experience. And again, I just think there's a subconscious comfortability when you've been through the process. Again, by no means does Illinois Mutual have to be the carrier you utilize. I mean, Tony could get you connected with one of the 6 or 7 carriers he has access to or whatever, but I'm just saying I think this is an important part of it, guys. It really just kills a lot of the fire when you can't really speak to your own experience with the client. And I get asked all the time, guys, when I'm talking to producers, what do you have? And of course I have income protection. I mean, kid me? I mean, what kind of power would I have if I didn't have that? You know what I mean? Again, I don't necessarily think it's an obligation to tell, any client or all your clients or whatever, what kind of insurances you have. You don't have to go into the details, but yes, I have it. I find it important, right? We really skipped through there. So again, Disability Insurance Awareness Month, all of May. Illinois Mutual has a $100 bonus for every application submitted in May and placed by the end of July. Fantastic opportunity for you guys to kick up your pocket change, right? So this is outside of regular commission, obviously. We also have some quarterly bonus opportunities too, based on even more production. So, I mean, there's a chance you could really get some good stuff going. If you yourself, again, don't have DI, you buy it on yourself in May. Yes, it's a discounted plan, and yes, that counts towards the bonus. We don't have a whole bunch of rules and hoops to jump through. This is a great opportunity to, again, just kind of jumpstart these conversations. Obviously, just like Life Insurance Awareness Month and Annuity Awareness Month, I mean, all this stuff is really just meant to, hopefully just kind of get a pattern going, get a trend going, get some energy going. It's great timing too, going into summer. When do you think a lot of accident injuries happen? Not often in winter. People are indoors. Maybe a car accident here or there because of the ice, but even that stuff usually isn't that bad because people are driving a little bit slower. At least I hope they are. Maybe a slip on the ice, on a sidewalk or something, but it's out there where people are camping and cleaning the gutters and mowing their lawns and sharpening the blade on their lawnmower. We'll stop creating horror film scenes here, but it's great timing, guys, and we're really excited. This is always a huge month for us, and it just creates a lot of great momentum. Going through the back half of the year here. Amazingly, we're so close, almost to midway. It feels like, even though we're just starting May, it just it rips so quick. Again, I know I didn't get into a whole lot of the bits and pieces of disability insurance policies and things like that. I just honestly don't feel like that stuff is uber important without just giving you guys tools in which to have this conversation. Outside of getting your clients motivated, which hopefully I gave you some ways in which you can motivate clients, typically without even saying disability insurance, right? Just talking about ensuring that paycheck, making sure that 6, 12, 24-month period of time isn't something that they have to deal with because they're going to have their income replaced before even that 6-month period kicks in. Just to give you a quick 1,000-foot view, these policies, again, pay for accident, injury, illnesses that make you unable to work 24/7. Doesn't matter if it's at work, at home, while driving. None of the other insurances affect our payout at the time of claim. We do, when we underwrite, of course, take into account whether you have group disability insurance or maybe an individual plan. But after our plan is in place, that's Illinois Mutual or any individual carrier, we are not going to look at what you were receiving from maybe workers' comp or L&I because something happened at work, or maybe an insurance settlement because of a car accident. None of that stuff, even Social Security. Typically, with us it won't, but some other carriers sometimes, but usually that won't affect how we pay out either. This is the most comprehensive way to make sure your most important asset is insured. And this stuff is portable, guys. This is following you all the way till age 67. Whatever you do, even if you change jobs, if your income goes up, you can typically buy more coverage with no medical underwriting because you can prove your income's gone up. There's an ability to add a return of premium rider, which is kind of like a third kind of disability insurance policy. The first kind is the self-insurance kind, right? That's the policy your client currently has. Brock, my client doesn't have DI. No, they do. Because if they have nothing to enforce, it's called the self-insurance plan. Best premium on the market. Problem is, the balloon payment is going to absolutely financially wipe you out because you're self-insuring your entire income. And let's just sprinkle this, either Parmesan or powdered sugar, wherever we're eating on top, and just say, guess what, guys? When you suffer a disabling event, not only do you need income replacement and replacement for your most important asset, which is your ability to earn an income, but your expenses actually go up. You have more bills than before you became disabled. Co-pays, co-insurance, deductibles, right? That's the beauty of health insurance. Health insurance helps you. I don't even know if you can say helps you. Maybe it will. Maybe there's some health insurance folks in here. Health insurance helps you. Yes, of course it helps you. Helps you by taking money from you and then taking that money and putting a little bit of their own mixed in with it and making sure the doctor and the hospital are paid. It's not paying you. And on top of that, it expects more money from you as well, right? Most people I know have between, I don't know, 2,500 and 5,000, sometimes more than that deductibles, right? So again, bills go up, income's gone, bills go up, nothing else is truly going to help you like this. And 24/7 accident, injury, illness. You can add a return of premium rider with us. It's going to cost extra money, but this is like a third option, right? First option, self-insurance plan. Second option, use it or lose it, income protection coverage like the whole industry sells. And when I say whole industry, we're talking about 8 or 9 carriers. Now it used to be like 80. And then option C is insuring your income as well as insuring your. Sorry guys, my mute just went on arbitrarily. Is you're ensuring your ability to have an income, paycheck insurance, but also insures your premiums. Because you have the potential, if you don't use the policy, to get 100% of your premium dollars back at retirement age, as early as age 65, but most people keep it in force till age 67 because that's when most people are going to work till, right? So again, I didn't want to get too into the weeds of these contracts. Tony can help you out with any kind of quoting and anything else that you needed. Wanted to definitely make sure that you knew about our DM bonus. Very excited about that. Again, all through the month of May. Any app submitted in May, placed by the end of July. And obviously we'll work tirelessly hard to get it placed before then. Most policies are going to get placed a lot quicker than that. You know, that's obviously going to be a situation where there's an extensive amount of medical history, maybe multiple doctors we're having to pull records from. I have Tony, Justin, and Jesse's contact info up here, as well as that for the General IAMS team. And Tony, I will pass it over to you for any questions and or kind of an outro here, bud.
All right, thanks, Brock. Really appreciate it. A couple of things here real quick. Something really big here in 2022 is our Top Producer Summit. I want to make sure to bring this to your attention as we're talking about submitting business. Obviously, I want you to submit business to help your clients out, and of course, you're making money on that business that's being submitted, but we do have a Top Producer Summit that's available. Qualification period, I should say, is from December 1st of 2020 through June 30th of 2022. 4.5 million points is needed to qualify. We do have some agents that have already qualified for this cruise. As you see, we've got some really nice exotic places that we're going to on this cruise. So if you're interested in more information on this or where you're at as far as qualifying, we can definitely get that information out to you. Do have a couple of polling questions before we get to the questions part. If there's more information that you would like from today's material, I do have polling question here. Can definitely get some additional information out to you if you want to respond there. We'll definitely make sure to get that additional information out to you. And I see we've got quite a few people looking for more information, so that's always good. I'll leave this up for a few more seconds to give everybody an opportunity to respond. Okay, I will go ahead and close that polling question down. And if you're a new agent and you haven't gotten appointed with any of the carriers that we work with here at IAMS, and you've been thinking about it, you're on the fence, and the material that you like, and you say, hey, I want to get appointed with Illinois Mutual or any of the other carriers that we work with, I do have a polling question here. If you respond to that, definitely get the necessary information out to you. So I'll leave this open for just a little bit. Okay, just a few more seconds here. Okay, we'll go ahead and close that down. And back to the questions part. Going to check and see if anyone has any questions take a look here, Brock, and see what we got. All right, first question, Brock, what are the age limits on this product?
Yeah, for Illinois Mutual, 18 to 60, 60. But Tony, you should have access to at least, I think Mutual goes to 61.
Right.
I believe principal for a multi-life scenario, so 3 or more individuals at a common employer, you can sometimes go to 64. Otherwise, they're 60. So right around age 60. Sometimes you can get a hair above. Obviously, there's certain circumstances where you can utilize Lloyd's of London. I don't even know if they technically have an age limit, but I know they can write up to age 70.
That is correct. So, yeah, and we work with all of those carriers that Brock had mentioned. So generally, if you were talking traditional DI, you're looking at up to age 60. But if they are, let's say, over the age of 61, we generally have to take a look at a carrier, Peterson International, which is underwritten by Lloyd's of London. I will say for those individuals that are in the higher ages, if we have to go that route, Peterson does require that they're making a minimum of 40,000 a year. So let's see what else we have. Okay, looks like max age, we got that. Any other questions? Well, Brock, looks like you got off easy here.
All right.
So again, if you guys have any questions at all, feel free to reach out to me. My email address is right here, tony@imsinc.com. We do have an office in Topeka, Kansas, and Justin Ford and Jess Riley are in that office. You can reach out to them. As you see, their email addresses are here. Or you can reach out to us at 800-255-5055. And lastly, for content such as this, as well as other content that we have available, not only on our website, but we do have a Facebook page, as you see here, as well as a LinkedIn page. So you can follow or like us. And hold on. All right, looks like we got another question, Brock.
Okay.
How does 67 come into play if these ages stop at age 60?
Age 67 is when a policy would stay in force until. So age 60, and I apologize if I didn't understand the question to begin with, age 60 would be the max issue age, but the policy lasts until age 67, which is kind of the normal Social Security retirement age. We adjusted our contract to Illinois Mutual right after essentially Social Security changed to 67 versus 65. So again, issue age is age 60 max, and then the policy itself stays in force until age 67. There is an ability to kind of conditionally renew it beyond age 67. I don't even know if that's ever happened in the history of Illinois Mutual because the cost is highly prohibitive. Because at that time we do reserve the right to, change the cost accordingly. Whereas it's going to be an even cost all the way till age 67.
All right, you started a flood now because got another question for you. Illinois Mutual, is it good for doctor and dental groups and overhead expenses?
Overhead expense, we definitely have a solid overhead expense product. We are actually the only carrier in the industry that has return of premium for overhead expense. So think about this as a contract that's usually written off by the business owner, right? So it's a tax shelter. They love that gain. Then you have coverage for your fixed overhead expenses. Granted, it would be taxable, right? Because you wrote the premiums off. And then you potentially would get all of your premium dollars back if you don't use the policy. Again, taxable because you wrote the premiums off. But think of the taxability on the payout side, which is usually not the case on the DI side, right? Because you're not typically able to write off those premiums. So all that stuff's tax-free benefit as well as the return of premium check. But on the business expense side, think of it as a wash because you don't just write off the cost of the policy, you're also writing off the expenses, right? And that's why that policy is viable. For doctor, dentist, and those kind of white collar groups, we can work and we have worked for them. Just keep in mind, we don't offer as large a benefit to some of the other carriers. Where we really fit in that market space And again, I'm not trying to promote us as the doctor, dentist, attorney, DI, company by any way, shape, or form, but it's for the younger folks. They love the return of premium. You just don't have that with the white collar professional market carriers. And I'm not kind of guessing on that. I know for a fact, right? It's just not something that's offered through the other guys. And Tony can tell you as well, since he has access to them. So sometimes what we'll see is a younger professional in the doctor dentist kind of market space, maybe more kind of millennial age, right? Starting out, kind of newer practice, maybe purchased practice, and really just loves that idea that, hey, I'm not just insuring my income and things, I'm insuring my premiums as well, right? So, surgeon, been in the industry 20 years, making 550,000. I wouldn't even blink towards Illinois Mutual, right? There's going to be other carriers that are a better fit. More than likely, they already have more coverage that we can allow for anyways. Newer professional in those market spaces could be an option. And again, I encourage you, versus taking my word for it, feed the stuff to Tony, and he can, play with the numbers for you and give you kind of a little bit of what everyone can offer. And that's really where his value add and really where he's able to corner the market for you.
And to add to this, Brock, because I've had questions like this before and have worked up DI proposals. So for a doctor or dentist that's just getting started out, I've seen it to where we've done 2, maybe isn't 3,000 the limit as far as non-med is concerned, or income information.
Right.
Okay.
Yep.
So I've seen it to where, let's say 2,500, they're looking for a $2,500 benefit, and their income warrants that, because obviously the income has to warrant the benefit amount. They've gone with, let's say, that benefit amount, 30-day elimination period, 2-year benefit period. So they're able to start receiving their benefits at an earlier period. It's still affordable. Illinois Mutual is very aggressive in the market space when we're looking
and
at
that's
a
when they're
30-day
paying
limit.
their school fees still too, right? So they have a low threshold for premium too.
Right, absolutely. So yes, it can work for them early in their career, but again, like Brock said, can definitely have that conversation with you and see what's going to be the best fit.
Yeah, there's usually a multiple coverage touch point purchase for folks in those industries too. They're usually buying stuff in stages.
Right. All right, last question. ONOC.
Yeah, so we can make our contract modified own occupation for the life of the contract, meaning as long as you cannot do your job and not working somewhere else, you can have that definition for the entire contract all the way to age 67. As far as true own occupation, I apologize for getting too into the weeds because all these terms are, just very, very, unique to disability insurance. We can do true own occupation for up to 5 years. So we can't do true own occupation for more than 5 years. True own occupation takes out the language that says you cannot work somewhere else. Kind of that double dip idea. So we can create kind of that double dip contract for the first 5 years. Beyond 5 years, it's going to be modified ONOC, so you're not able to double dip. So anything after 5 years that you're making in another occupation would reduce your benefit dollar for dollar. Again, in our market space, we typically don't even run a lot of contracts out to age 67 though, because again, to Tony's point, people are more focused on the fact that they can affordably purchase a 30-day elimination period. Because keep in mind, with a 90-day elimination period, people aren't going to get their first benefit check for 120 days. In the more middle America market, people can't wait 120 days. I'd argue a newer doctor, like you brought up, Tony, or newer dentist probably can't wait 120 days for their first check either. So it really ends up being a balancing act. And I think that Illinois Mutual is a little bit unique in the fact that we have some ways to really kind of change the story versus that kind of blanket cookie cutter way that a lot of disability insurance policies are run. Someone making a ton of money with a ton of rainy day fund can probably wait 120 days, but most people, I would argue, can't, whether in a highfalutin occupation or not, if they're newer.
All right. Well, that concludes our webinar for today. I want to thank everybody for joining. Brock, as always, thank you for taking time out to talk about disability insurance, especially during Disability Awareness Month.
Yep.
For you guys that have any additional questions, definitely reach out to us. We'd be more than happy to answer those questions. We'll be reaching out to those of you that have attended to see if there's additional information that is needed, or after the webinar you realize you do have a question. So Again, thank you everyone for attending. Brock, thank you.
Absolutely.
And you guys have a great week.
See you guys.
All
Appreciate
right.
it. Happy
Yep.
TM.
Bye.